It's now time for us to take a look at your market news. Asian stocks were up on the back of gains made in the United States last night, but volume trade was subdued due to many markets in the Southeast Asia region celebrating the Lunar New Year, China and Hong Kong included. In Japan, Prime Minister Shinzo Abe reappointed the Bank of Japan's Governor Haruhiko Kuroda for another 5-year term, with some analysts suggesting that this could mean continued quantitative easing stimulus for longer. The yen remained at 15-month highs relative to the dollar. Despite that and fairly thin trade, stocks continued to register gains. The Nikkei share average closed up 1.2%. China and Hong Kong markets are closed for the Chinese New Year. Wall Street shares surged ahead for a 5th consecutive day, with the Dow Jones breaching the 25,000-point level for the first time in 2 weeks. The Dow and the S&P rose 4% on the week, while the Nasdaq was up 5%. The Dow Jones Industrial Average posted gains of 1.2%. The S&P 500 rose by the same margin, and the Nasdaq Composite Index ticked up 1.6%. For more on the market news, we cross to Johannesburg Stock Exchange. Nompumelelo Siziba is standing by. Good afternoon, Nompumelelo. What's happening with the rand?
Oh, thanks very much, Nzinga. Well, the rand has firmed very nicely. It was as firm as 11.57 against the US dollar, around between 9 and 10 this morning. It's paired some of the, it's lost a little bit of those gains, and it's now hovering around 11.63, but still very firm relative to where it was just a few days ago. So the rand doing very nicely. We also know that the US dollar has weakened relative to other currencies, and so therefore the rand will benefit from that as well. But people really attributing its strength to local developments that we've seen, that local transition of power that we've seen in recent days. On the all-share index, that closed up 3.7% yesterday, quite substantial, and we're still seeing the all-share index in positive territory. The financials did particularly well. In fact, those stocks which are heavily correlated to the South African economy did well, but I see that the financials have come back a little bit, and mining stocks not doing that great, but still we're in positive territory on the all share. Let's take a look at the indicators. Well, I'm joined by Warwick Lucas. He's from Galileo Capital. Thanks for joining us, sir, as always.
My pleasure.
Good stuff. Let's start with global markets. They've had a very good week this week compared to what they experienced a little while ago, although they haven't managed to recover to those pre-wobble levels. So can you say that we're now comfortably stable at repriced asset levels?
Yeah, I mean, it's sort of almost like recovering from a period of rather severe indigestion, a little bit too much excitement and feasting, and then a spot of Rennies, which is a 10% correction. So, yeah, I would say that some sense of normality coming back in there. And as I've mentioned before, it's basically a competition between excitement about the economy and concern about interest rates. And these forces are going to compete with each other for some time.
Indeed, they will. And then Japan, very quickly, I see that Shinzo Abe, the President or Prime Minister there, has reappointed the Bank of Japan Governor. His name is Mr. Haruhiko Kuroda. He has been at the helm while they've been doing this quantitative easing stimulus program. Does this suggest that that's going to stay for longer, given the fact that they're having to compete with other central banks which are beginning to tighten their monetary policy?
I think they will continue. I think it always had the most deflation in that economy in any case. Yeah, so that doesn't surprise me at all. So it's only them that really left doing the quantitative easing lifting once the ECB pulls out of the game, which will probably happen about 9 months' time. So yeah, I think they're going to persist with that, and probably through as long as another 2 years.
The dollar keeps on weakening. Very interesting when markets all expect that we're going to see further interest rates, especially in light of the expectation of higher inflation. Bond yields there rising. So effectively, the interest rate that you get on a bond is now rising, but the dollar keeps on weakening. What's going on with that, and what are the benefits in terms of commodities?
Okay, so in terms of the rate hikes pushing through to currency strength, well, I mean, we actually have to see those hikes more clearly before one can say, okay, they're banks. So in the meantime, with inflation looking like it's got a little bit of strength in it, then the concern there is that, well, do we pendulum into negative real rate territory? So I think that's got to follow through.
All right. And then here at home, a wild day yesterday on the markets, bond yields going down, equities shooting through the roof. At some point, the all-share index being up 5%, but closing up generally at 3.7%. What a great day. Is this sustainable, and is it all due to the political transition?
I think a heck of a lot of it's due to political transition, although clearly some overseas strength coming through was a handy contributor as well. So a certain amount, I think, of a honeymoon factor. I think certainly South African bonds looking somewhat investable again. I mean, downgrade issue hasn't gone away, but perhaps it'll be seen to be on a bit of a back burner. So all in all, a bit of a honeymoon effect. Is it sustainable? Well, I think it depends on how decisive now changes are made as to the sustainability. I think we have seen quite a high level of decisiveness coming through from Ramaphosa so far, much more than I think the market and public generally anticipated. So perhaps this can be sustained.
Look, it's at President Ramaphosa's pleasure and leisure that he can adjust and tweak his cabinet. But from your perspective and talking to foreign investors, how soon does he have to do that in order to be taken seriously and to effect some of the things that need to be effected? And what are some of those things that you think he should be effecting sooner rather than later?
Well, I think he probably will implement them sooner rather than later. I think a key thing is to ensure that some kind of trust is returned to South Africa's financial profile, that we come back into the zone for foreign lenders. So that's probably going to mean quite a lot in the key economic clusters and the key infrastructure clusters, that people go in there that can be seen to deliver. And I think the same goes for state-owned enterprises. I mean, we've already seen quite a lot of activity in Eskom, which is a key problem, but there are other big problem enterprises that need to be addressed as well, because if nothing else, they've just been draining water as fast as it could flow into the bucket, and I think it's time that stopped.
Indeed. All right, we're going to leave it there. Thank you so much for your time. As always, Warwick Lucas, Chief Investment Officer at Galileo Capital, saying that now that the honeymoon is over, the hard work has to begin. All of South Africa Inc. needs to put their hand to the wheel and actually make this country work again. After a short break, Nzinga has more business news for you.